Hi everyone, my name is David, and today is going to be the first episode out of at least 13 in an experiment into the power of dollar cost averaging with exchange traded funds versus cryptocurrency. So, what I wanted to do is to dollar cost average, and for those who don't know what dollar cost averaging or DCAing is to put in a fixed amount of money into a particular investment vehicle on a routine basis. So you don't try and time the peaks or the troughs, you just buy in on a very mundane and very boring kind of basis, which is good for someone like me. So I wanted to test this between July 2021, which was the start of this month, because today is the 2nd of July, and test until at least the end of June 22. And if it goes well, we'll may continue and see what occurs in the next year or multiple years after that, but at least for 1 year at the start. So exchange traded fund rules, I wanted to put in 1,000 Australian dollars a month. I was going to use this CommSec Pocket app, which is just a retail investing tool that's on a mobile phone. The CommSec is the financial arm of the Commonwealth Bank, which is one of the big banks in Australia, and I was going to purchase this tech-savvy exchange traded fund, which has a collection of different tech businesses such as Tesla, Facebook, Amazon, and I didn't choose this for any particular reason, just maybe thought that tech stocks were pretty cool. That's pretty simple. The crypto side of things was going to be a bit more in depth. Again, I was going to put in 1,000 Australian dollars a month. I was going to use the Polygon network to purchase my crypto, just because the transaction fees are practically free there. I was going to purchase 50-50 Ether versus Bitcoin, and then I was going to not just leave it there, but I was going to yield farm as well, because that seems to be all the rage in cryptocurrency, decentralized finance or DeFi right now. To further complicate that, I was going to put half of that Ether Bitcoin into Aave, which would allow me to further borrow another 40 to 50% and then use that 40 to 50% to then yield farm, whereas the second stream I was just going to directly yield farm. For those who don't know what yield farming is, it's when you deposit a certain amount of cryptocurrency and then you get rewarded for providing liquidity or providing those tokens on an exchange to trade. The ETF side of things, this is a quick snapshot of the first month of what it shows. So I purchased 32 units at $31.16, which gives a total price of $997.20. That's pretty straightforward. On the crypto side of things, I actually found it quite difficult to get from Binance, which is my kind of mainstream crypto website, and transferring that from Binance into MetaMask on the Binance Smart Chain or BSC network, and then transferring that over to the Polygon network, and that I just found that quite difficult, and it wasn't particularly intuitive for me. So it took me actually 2 hours, whereas purchasing the ETFs didn't take very long at all, only 20 minutes. So for the stream 1, this is a quick snapshot of what it looks like. To be fair, this is actually not. I didn't purchase the cryptocurrency today. It was actually yesterday, but my assets in Aave, which is as simple here, are 50% in Bitcoin and 50% in ETH, which isn't exactly half right now, but is $242.50 for the Bitcoin side and $234.78 for the Ether side. And I think that's because Ethereum has dropped a little bit since I bought it yesterday. So after depositing that, then I've actually been able to borrow a set amount of USDC, which is a stable coin, and I've subsequently used that and converted that into further Bitcoin and Ethereum. And my premise for doing this is actually, I think that Bitcoin and Ethereum are pretty solid tokens, and they'll go up in the long run. So all up, I've borrowed this amount of USDC and then converted that into further Bitcoin and Ether, and then staked that onto the Curve finance platform for a total value of $237.70 Australian, using the current USD to AUD exchange rates. So I'll add these all up at the end just to show you where I stand. So the stream 2 is a lot easier. I have put in Bitcoin and an Ethereum pair onto Defi, which is another liquidity exchange, and that total value is over here, $360.49, and you can see that the reward rates, or the annual percentage reward, is quite high. So you're meant to get 65% back, which is actually very high compared to anything you can get in the bank, but we'll see if that really holds true over the course of this year. Anyway, the amount that I have in stream 2 is $483.06 using today's exchange rate. So finally, just as a summary of, I guess, month 0, exchange traded funds, that took me not very long, and took me 20 minutes. It was very easy to purchase 32 shares or 32 units of the Tech Savvy Exchange Traded Fund, and I've got a total value of $997.20 after a $2 transaction fee. Crypto was much more difficult, and in stream 1 I've managed to get $477.28 worth of Bitcoin Ether, and after borrowing a further Ethereum and Bitcoin and subtracting the loan, we're net positive 56 cents right now, which is more or less expected. What that means is that the amount that I've borrowed and the value of that borrowing is roughly the same. Finally, for the stream 2 deposits, it's worth $483.06 right now. So you can see that these two are roughly similar. So total value of the cryptocurrency is $960.90. Again, all of this is in Australian dollars. So just one interesting point I thought was that the exchange traded fund side was much simpler, it's quicker to do, and there's only a very small transaction fee to actually get it up and running, so maybe like a 0.2% fee to get it up and running, whereas crypto did take longer, and the amount that I'm quote unquote penalized it takes to get on the amount that it takes to get online is actually almost 4%, and I think that's probably because you need to exchange Australian dollars to a token, and then change that token, such as USDC, into Bitcoin, and every time you do the transaction there always is a bit of slippage. So hopefully the high reward rates for cryptocurrency will pay off, because already at time equals 0, the exchange traded funds are just seems much more efficient than crypto, but we'll see how that goes. Anyway, that's it for now, and we'll see you at the start of August.